Welcome. Thank you very much for joining us here in this session. This session is about value-added tax. We will be discussing the concepts and principles. It has actually been designed keeping in view the implementation of VAT in Gulf and Saudi Arabia. But actually, because the concepts and principles are same all around the world, so everyone from anywhere can benefit from this course. So we'll be discussing what is this tax, what are the types of different rates, how it is collected, how it is implemented, and how it is accounted for. I thank you once again, and I'll tell you that the process we'll implement in this course is, once the slide is in front of you, I will read out the slide and then we'll explain each and every line and concept in that slide. And I hope everything will be clear. If you have any questions, you can ask in the comments and I'll reply your questions as soon as possible. Thank you very much. Let's start over. The first slide is, what is VAT? A tax on sale of goods and services. This VAT, value added tax, is a tax on sales of goods and services. Very clear. Whatever is being sold, either service or good, there's a tax on that sales. That's called value added tax. Okay. Point number 2 is an indirect tax. Payer does not directly deposit this tax through General Authority of Zakat and Tax. What does it mean? It means it is an indirect tax. The person who is paying tax is the consumer. He is paying tax to the retailer or the manufacturer. He is not paying this tax directly to the Zakat and Tax Department. So his tax will be indirectly collected by GAZT. Actually, the retailer or the manufacturer will collect this tax, and he then at the end of the month or at the end of his tax period, he will deposit this tax to General Authority of Zakat and Tax. Because the authority does not collect it directly from the consumer, that's why it is called indirect tax. Point number 3 is, all goods and services bought, supplied or imported are taxable unless otherwise specified. This sentence means everything that is being sold, bought, supplied or imported, everything, any good, any service, that is taxable unless otherwise specified. What does it mean, unless otherwise specified? It means there are few exemptions. Only few. There are only few things or services that has either been exempted or the rate of tax for those goods and services is 0. Any other goods and services other than those specified are all taxable. What are those specified goods and services? That we will definitely discuss in next chapter. Point number 4 is a tax on consumer expenditures. What does it mean, a tax on consumer expenditure? It means the tax burden, the ultimate burden of the tax will be on the end consumer. Let's take an example. There's a company that manufactures cell phones. They buy the raw material for the cell phone and they pay a value-added tax on it. Then they assemble and manufacture the cell phones and then sell it. Once they sell the cell phones, at that time they charge value-added tax also. So they collect the value-added tax from the consumer. Now, the manufacturer will collect the tax from the consumer and deducts all the tax whatever he has paid on the raw materials, and the remaining amount, the balance amount, the manufacturer will pay to zakat and tax authority. It means this is the consumer who has actually paid the tax. Whatever tax the manufacturer has already paid to the raw material sellers, the manufacturer has deducted that payment of tax from the tax that the consumer has paid to him. If he has got the raw material and paid a tax of 50 real and then he manufactured the unit of cell phone and he sold it and collected a tax of 100 real, he will deduct his tax of 50 real and remaining 50 real he will deposit it to authority of zakat and tax. So ultimately the tax of 50 real that has gone to the government general authority of zakat and tax has actually been paid by the consumer, not by the manufacturer. Whatever manufacturer has paid, he has deducted. So there is no loss for the manufacturer. Actually the burden has arrived on the shoulders of consumer. So in the first slide we learned 4 things. The first thing, it is a tax on sales. A sales of goods or service, any sales will include this tax. Point number 2 was it is indirect tax. The general authority of zakat and tax does not collect this tax directly from the consumer. Instead, it collects it indirectly through manufacturers and retailers. Third point is all the goods and services are taxable unless otherwise specified. It means there are only few things that are not taxable or the tax rate is 0. Majority of the things, 99.99% of goods are taxable. And the fourth point we learned was about the burden of the tax. Who will bear this burden? This burden will be borne by consumer. Consumer has to pay this tax. Hope it's clear what is VAT. Now we will check who are the parties to this VAT system. While we are going to discuss the implementation of this VAT, this tax, we must know who are the parties involved. Let's see. Party number 1 is General Authority of Zakat and Tax. This is the authority in charge of implementation and administration of VAT in Kingdom of Saudi Arabia. So this is the authority that will devise the law and implement it and will manage it, administer it. Number 2, there are suppliers, manufacturers, retailers, and service providers. These are all the parties that will collect the tax and will file VAT returns to make final payment or receive refund from General Authority of Zakat and Tax. Number 3, the end consumer. The tax is finally be paid by the end consumer, but as the tax is an indirect tax, it will be paid through registered suppliers, manufacturers, or retailers. This is the last point we have discussed in the previous slide, that the burden lies over end consumer, but he cannot pay it directly to Zakat authority. Instead, it pays through retailers or suppliers. So there are three main parties into the whole tax system. Number one, the authority of Zakat and tax, whose responsibilities are to devise the procedures for implementation and then make sure its implementation and administration. Number two, there are parties who actually sell goods and services to the end consumers, and they collect VAT and then pay it to Zakat and tax authority. Number three is the end consumer, who uses and consumes the goods and services and actually pays VAT, this tax, on the consumption of those goods and services. So these three parties will always be involved in the whole tax system. When as an accountant or as tax consultant or tax administrator, when you will have to indulge yourself in any activity related to VAT, you will have to deal with these three type of parties. How does it start? Registration with General Authority of Zakat and Tax. Every seller or supplier of goods and services has to register with General Authority of Zakat and Tax to be able to deal with Zakat and Tax Authority in future for the taxation. To pay the taxes, whatever they have collected, or to get the refunds, whatever they have paid in the process of manufacturing and producing the goods. So, approximately every supplier, every retailer, every manufacturer has to register. There is a threshold for mandatory registration. This is 375,000 Riyal annual sale. It means every seller, supplier or manufacturer, service provider whose annual sale reaches 375,000 Riyal or above, it is mandatory for them to get registered with the authority for this tax system. There is another point, voluntary registration. This point tells us that all the suppliers or producers, manufacturers, whose annual sales does not reach 375,000 Riyal, but it is above 187,500 Riyal, it is voluntary for them. They have the choice to get registered. Why it is voluntary for them? Because they will get benefit. Whatever they are spending the tax, they are paying the tax to their suppliers of the raw materials. That tax they can claim from General Authority of Zakat and Tax, even if they are supplying the zero rated goods, means they are not collecting any VAT from the end consumer, but still they are paying the tax to their raw material suppliers. So that tax that they are paying to raw material supplier, they can collect it. They can reclaim it. They can refund it from this GAZT and tax authority. There's the third point. The first 2 points we discussed about registration, mandatory registration and voluntary registration. Mandatory registration is for all the suppliers sorry, having annual sales more than 375,000 riyal. Voluntary registration is for those making more than 187,500 riyal annual sales but less than 375,000 riyal, and they supply zero rated goods and services. The third point is now regarding deregistration. If any company ceases to carry on economic activity or ceases to exist as a legal person, it must deregister. In case supplier is a non-resident person and he does not make any supplies in recent 12 months, he must get deregister. And a resident would also deregister if last 12 months sales are less than voluntary registration threshold, and if last 24 months are less than mandatory threshold, and next 12 months are expected to be less than voluntary threshold. I'll explain this point again. As we have studied about registration, there are options for deregistration also. If a company ceases to carry on economic activity or ceases to exist as a legal person, it must deregister. This is one point. Okay, if the legal person is a non-resident person, then he must deregister if there are 3 cases. If there is one case only. In case of non-resident, if he has not made any supplies in recent 12 months, he must deregister. And in case the legal person is a resident one, by resident means he is living in Saudi Arabia or in Gulf, he must deregister if he fulfills these 3 conditions. Last 12 months his business is less than voluntary registration threshold, and in last 24 months total of his annual sales are less than mandatory threshold. Mandatory threshold is 375,000, and the next 12 months he expects to be under voluntary threshold. He must deregister. Number 4th point is taxable person. Who is taxable person? If the business turnover exceeds the threshold, it has to be registered with General Authority of Zakat and Tax. It may then be referred to as taxable person. Any person who has to pay the tax is a taxable person. Any business who is exceeding the threshold and he has to pay, the business has to pay the tax, that business is taxable person. Non-taxable businesses. What are the non-taxable businesses? Number 1, whose annual sales are less than 187,500 Saudi Riyal. Those are non-taxable business. They cannot collect VAT. Number 2, whose all products and services are exempt from VAT. All those businesses who are providing the products and services that are exempt from VAT, there is no VAT on them, they are non-taxable businesses. Let's move ahead to understand VAT flow. How does it flow? How does it move on? Let's study input VAT. There is input and there is output. There are two taxes under VAT: input VAT and output VAT. Input VAT is the VAT that a business pays to its suppliers on the purchases and can reclaim from General Authority of Zakat and Tax through VAT return. So this is a tax that is paid on the purchases, that is paid on the purchases of raw materials, that is paid to the suppliers and vendors. On inputs, a business, whatever he purchases, that is actually inputs. So tax on inputs, purchases are actually inputs. So taxes on purchases or inputs are called input VAT. Number 2 is output VAT. Output VAT is the VAT that a business charges to its customers on sale of goods and services, and it will be finally deposited to General Authority of Zakat and Tax after deducting input VAT through VAT return. It means output VAT is the VAT a business charges to customers. A business that has used inputs to produce outputs. Now the outputs are ready and the business is selling those outputs, those goods and services. And the tax the business is charging on that outputs is called output tax. It means tax on sale is output tax, output VAT, while tax on purchases is input VAT. I hope this is clear. The third thing that we will discuss under VAT flow is VAT control account. VAT control account shows all the input VAT on one side and the VAT output on the other side, and any corrections, balance claims are also shown in that VAT control account, so that to reach a final net figure of VAT payable or receivable from General Authority of Zakat and Tax. What does it mean? VAT control account is a sheet, or it is a chart that shows input VAT on one side, output VAT on the other side. And if there is any amendment, if there are any corrections regarding past VAT return or any balance claims, they are also mentioned on any of the side, on any of relevant side of this VAT control account. And one side minus the other side, output side minus the input side, will give the net figure that is payable to Zakat and Authority, Zakat and Tax Authority. Now you know what is input tax, what is output tax, how input and output are written on VAT control account to get the final figure to deposit it to General Authority of Zakat and Tax. The next thing to learn about is VAT return. VAT return is a process to transfer data from VAT control account and related sources to some prescribed forms to be submitted to General Authority of Zakat and Tax. Let us know it much more deeper. Above we have studied input VAT, the VAT a business has paid to its suppliers. Then we studied output VAT, the VAT he has collected from the customers. Now he has his record that shows some of the tax he has collected and some of the tax he has paid. What is the net figure? Tax collected is more or tax paid is more? Whatever is the case, that we have to write in some prescribed forms provided by General Authority of Zakat and Tax. These forms we have to fill and then submit to General Authority of Zakat and Tax. That process of filling that form and submitting it to General Authority of Zakat and Tax is called VAT return. So this is how VAT flows. Input VAT, the VAT paid on purchases is input VAT. The VAT collected on sales is output VAT. VAT control account gives us a net figure if output VAT is more or input VAT is more. Whatever is the result, that we explain it or fill it on the prescribed forms by the General Authority of Zakat and Tax, and then submit that form to this authority and make relevant payment. This is how does VAT flow. Now we will discuss about VAT rates. There are three types of products and services. Here in Saudi Arabia they have categorized it in three categories. The one category is of standard rate, that is currently 5%, means all supplies except zero rated and exempt supplies are to be charged at 5%. So anything that is sold, good or service, and it is not a zero rated or exempt supply, it will be charged 5% value-added tax. Second is zero rated. In previous slides we had studied that every supply is taxable unless otherwise specified. Now that unless otherwise specified, now that is being elaborated. So be attentive. What are those specified items that are not taxed or that are taxed on 0%? Zero rated are the supplies that are actually taxable, but government has reduced that tax rate to be 0% for the welfare of the society. What are that goods and supplies? Number one, non-GCC exports. If we discuss about exports for Saudi Arabia, anything being exported to the countries other than GCC, Gulf Cooperative, Gulf countries, that is zero rated supplies. Number two, international transport, means air tickets. If we are flying to countries, other countries, that air tickets will be zero rated. There will be tax rate 0, so there will be no tax actually. But remember, it is an international transport only. It is not a domestic transport. If we are flying from Jeddah to Riyadh or Riyadh to Jeddah, within the Saudi Arabia, there will be a VAT rate and same standard rate, 5% rate. So only international transport is zero rated. Then there are medicines and medical goods. Yes, these are also zero rated. But which medicine and medical goods? There is a list printed by the authority. The list includes all the medicines and medical goods that are zero rated. These are actually maximum 99.9% of medicines and medical goods are zero rated. The exceptions are only those medications that are not actually directly related to health, but these are just related to improvements like mouth washness and anything that is not actually urgent to use. Those things are excluded from the list, and every other actual medicines and medical goods that are zero rated. Then there is investment metal, 99% pure. It means investment metals that are very pure, that are zero rated, like gold or silver, that are 99% pure. Remember, whatever is being sold on shops, jewelry shops, the necklaces, the bangles, these are actually not pure, not 99%, not even 90%. So these everything are taxable. Only investment goals that are 99% pure, that are zero rated. Businesses that provide zero rated supplies collects no output VAT. This is very important point to remember. Businesses that are involved in zero rated supplies, because the supplies are zero rated, so they will not collect any output VAT, but they will still claim their input VAT, whatever they have paid on the related purchases. All the above discussed goods and services that are zero rated, the suppliers and providers, they don't collect any output VAT, but still they pay input VAT upon all those related purchases to make this delivery of services or goods happen. So that way VAT that they have paid to the vendors and suppliers, that they can claim from the General Authority of Zakat and Tax and get a refund for them. Very important point. Next is exempt supplies. Exempt supplies are those where no VAT is charged. That is financial services, residential real estates, financial services like banking activities, currency exchanges activities, the loans, the transfer facilities, they are actually exempt supplies. But there's one point to remember: those institutions, financial institutions, there is one fee they charge on these services. That fee is not exempt. The net amount of loan, that is exempt. The interest is exempt. Okay, but the fee, transfer charges, these kind of fees, they are not exempt. Then there comes residential real estates. Residential real estates is also an exempt supply. So there will be no VAT on house rents. But those real estates that are not residential, that are commercially residential, Remember, commercial residential real estates will also be taxable. Like if I'm having a building that is being used for residences, but that is commercial residences. I'm selling the rooms for 1 night, 2 night, 3 night stays, like hotels. So then it will be taxable. Residential real estates that is exempt, this is for general public for their own residence. So if the use is that purely residential for general public, that is exempt. Now there is another point to remember, is that business that provides exempt supplies cannot even claim the input VAT they paid on related purchases. See the difference between zero rated and exempt supplies. In zero rated, businesses were providing zero rated supplies, so they were not collecting any output. Here in exempt supplies, approximately same is the case, because the supplies are exempt supplies, so they are not collecting any output VAT. So the VAT or the tax being collected and then to be paid to authority of zakat and tax is zero in both the cases. But both these kind of businesses, they actually pay VAT. They have the input. They have paid VAT on their related purchases. For that input VAT, there is a difference. The zero rated businesses, the businesses that supply zero rated goods and services, they are allowed to claim the input VAT and to get the refund. While the businesses, they deal in exempt supplies, they are not allowed to claim their input VAT. So they will have to bear their input VAT themselves. They will not be allowed to get refund. This is a very important difference between zero rated supplies and exempt supplies. So keep this in mind. We will review it again, this slide. We'll summarize it. Standard rate, zero rate and exempt supply. Standard rate is the 5% of VAT that is levied upon maximum sale, maximum goods and services. Zero rated, there are few supplies that are zero rated, like non-GCC exports, international transport, medicine and medical goods, investment metals. All the sale of these material will be zero rated. And there are exempt supplies, financial services or residential commercial services, they are exempt from tax. The point to note is that the businesses that deal zero rated supplies, they will be allowed to get refund of their input VAT, while those businesses who deal exempt supplies, they are not allowed to claim the refund of input VAT. This was the main idea, the main concept of VAT. I hope every one of you has got the general idea. Now in next slides we will discuss this further with detail. I would suggest you to review and rewatch the lecture again, revise it, and once each and everything is clear, then move ahead to the next slide, next lecture. Thank you very much. God bless you.